Okay, everyone, thank you so much for your patience. We're going to go ahead and get started with today's seminar. My name is Vanessa Sheppard. I am a realtor with Home Smart Realty Group. I've been a realtor for about 3 years now. I basically became a realtor during the whole pandemic season. So it was, yes, it was late 2020. I've always been interested in real estate. I've always been interested in like owning land because that is very important. And if you own land, you can help build legacy. Not only that, unless you don't pay your taxes, generally speaking, that is yours to build what you want to build with, as long as you stay within the criteria of the township. So with that being said, I service the Chicago metropolitan area. And if you have any questions regarding investing, buying, or selling, you can most certainly reach out to me because I would be that person who can assist you or at least refer you to someone who can. So with that being said, I believe knowledge is power. Real estate knowledge is very much so powerful. So with that being said, take it away, Tony. And it will say Glenn, but this is Tony.
Yeah, I am Tony. So hi everyone. Let me move to the slide. Tony Marino, I'm branch manager of the Marino team in Naperville. I'm licensed in Illinois, Colorado, Florida. I've been licensed since about 2014. Specialize in getting people into homes using down payment assistance. And I use education to help people understand how they can become homeowners and own a part of the American dream. So home ownership is still the American dream, and buying a home can be an exciting and intimidating process. This webinar will provide you with the information that will help you begin the dream of home ownership. So why seek the American dream? There's a need and want to become a homeowner. However, too much misinformation. Do I really need 20% as a down payment? Learn to set aside your lack of confidence of becoming a homeowner. Many think they are years away from owning a home. 50% of renters think they cannot afford the down payment. However, they have the financial means to maintain monthly mortgage payments. That is about what they pay in monthly rent. One of the things that we'll talk about today is the IDA, Illinois Housing Development Authority, the down payment assistance program. And then the American Dream enhances the quality of life, help individuals with wealth building and equity appreciation. Some of the myths, 45% think you need a very good credit score to get a mortgage loan today. They think a good credit score is 780. 35% think you need 20% down payment. 31% don't think they can qualify for a mortgage loan. So what are the advantages of home ownership? One, a place of your own versus renting, stable housing costs versus rising rental costs, build equity, which builds wealth, get tax deductions on the interest and the real estate taxes you pay, borrow against the equity you build in your home, or convert it to cash later when you retire. Homeowners have 45 times greater net worth than renters. So we're going to start off with the home buying process. So the very first step that you do is you get pre-approved. So get pre-approved for a home loan for free. I'll help you determine how much you can afford, and then I can help also improve your credit if necessary. So we can talk about it. We have a what if simulator where I can play around with the credit and tell you exactly what you need to do to get your score to where we need to be to move forward. After pre-approval, you then meet with Vanessa to discuss your housing needs and go shopping. We'll know the purchase price from the pre-approval, size, neighborhood, lifestyle. Once you find the home, you make an offer. Once the offer is accepted, we have an executed purchase contract. You give earnest money. Earnest money goes to the seller up front. Could be $1,000, could be $2,000. The seller holds on to that money, but that money will go towards your down payment at closing. You select an attorney, perform your due diligence, home inspection, radon inspection, roof inspection. send executed contract to me. I will send you out the application to sign. Once we have all the documents back, the loan goes through processing department. We order the appraisal, order verifications of employment. Once we have all that, then my processor will then send the loan to underwriting for a conditional approval. Once we receive the conditional approval, there's always some conditions. It may be we need another pay stub, or we need a letter of explanation for an address that showed up on the credit report. So once we get those conditions back that the underwriter wants, then we'll resubmit that to the underwriter for the clear to close. So once we get the clear to close, you schedule the closing, and the closing will be at a title company or the attorney's office. That day, you'll sign all the closing documents. Seller receives the check, which is the money you borrowed from the lender. You receive the keys and the deed, and you can move in that day. This is just a little roadmap that shows you the process that I just explained: pre-approval, home search, make an offer, offer accepted, and we go to application. Then you will submit the supporting documents, which we'll talk more later on in slides about the documents that we'll need. Home inspection, processing, you'll start shopping for homeowners insurance. You get the appraisal ordered up, you pay for the appraisal. Then we submit it to underwriting, conditional approval, gather those conditions, resubmittal, clear to close, and then you go to closing. So that is the steps to home ownership. Now let's get into loan programs. The main ones that we're going to be talking about today is going to be the conventional loan. So they have a 97% conventional loan for first-time home buyers, 95% conventional loan, non-first-time home buyers, and then the FHA 96.5% loan to value. And the other ones we're going to talk about are these three at the bottom, the IDA loans.
Tony,
You have this, yeah.
can you explain what that means to those who've never seen this before? What does 100% versus 96.5% mean? And does that mean that there's money coming out of the actual person's pocket?
Yeah. So this is, so at 96.5% is what you'd be borrowing. So you would be putting 3.5% down for the down payment. Same thing with the conventional. You're borrowing 97% of the purchase price, and you have to put 3% as the down payment. So that's the that's what, and we'll get more into like the down payments, the minimums later on too. So with these IDA loans, what we do is we attach one of these IDA loans to either a conventional or an FHA loan. So we have the 6,000 IDA, which is forgivable after 10 years of living in the property. We have the 7,500 zero interest loan with deferred payments for 30 years. So it just sits there. Eventually you will have to pay it back. That's either when the 30 years are up, or when you sell it, it would come out of the net proceeds of the sale of the home. Or if you were to refinance, we would just roll the 7,500 into the new loan amount. And then the last one is 10,000. This one does have a monthly payment. It's zero interest loan with a monthly payment of $83.33 per month for a 10-year term. And we'll get more into those programs later on. First, what we're going to do is we're going to go over how you qualify. So there are 3 C's of lending. The first one is your credit. The second is cash flow. This is your debt to income ratio. This determines how much you qualify for. And then C is collateral. This is the amount bringing to closing. So the first C, credit. When we pull your credit, there's going to be 3 different scores. You have Equifax, Experian, and TransUnion. And here's the credit breakdown of what goes into your scores. The most important one is your payment history. Staying on time on the payment history, will keep your scores up. The second one is amounts owed. This is really called credit utilization. So with credit cards, where they really want you to be for credit cards, we say that your credit limit is 500. They want to see that your balance is 30% of that credit limit. So say you have a credit limit of $500. Each time that the bill comes out, you want that balance to show 150 or less. 150 would be 30%. Every time the statements come out, that is what they are sending to the credit bureaus. If you are above 30%, especially if you're above 50%, it's going to knock your score down each month. But keeping it 30% or below each month, your scores are going to be in the 700s with perfect payment history. So that's how, and then length of credit history, that's just keeping, like if you have a credit card that you don't use, never close it, just let it sit, because length of credit will, that helps the score too. Inquiries, this is if you had your credit, if you have your credit pulled by like say a credit card company, then an auto loan company, and then a mortgage company all in 1 week, that is going to hit your score. But if you have, say you don't have your credit pulled a lot, say I pull it, the max that it should drop is only like 4 points from a hard inquiry. So what we do is when we get we will take the middle score of the three. So here's an example. If I pull the credit, we got an Experian 750, TransUnion 735, Equifax 721. We are going to use the 735 as the qualifying credit score. And then the minimum credit scores, you have the conventional is 620, FHA 580, and then conventional or FHA with the IDA down payment assistance has to be at 640 or above. So that was credit. So now let's take a look at cash flow. So debt to income ratio, this determines how much you qualify for. So the calculation is you're going to take the proposed housing payment of the property you're buying, plus the monthly debt that shows up on the credit report. That could be minimum credit card payments, auto loans, student loans, personal loans. And then we're going to divide that by your gross monthly income. So let's take a look at and we'll have an example at the end here. So what goes into the housing payment? Principal and interest, the homeowner's insurance, the real estate taxes, the private mortgage insurance, flood insurance if the property is in a flood zone. That's the only time you would need flood insurance. And then if it's a condo, you'll have HOA dues also that will be included. So here's an example, FHA purchase, 200,000, 3.5% down. Principal and interest, real estate taxes, homeowners, the DPA payment, that is if we were going with the IDA 10,000. We would have an $83.33 there, which you'll see a monthly payment with that in there. So in this example, the total housing payment is $1,765.35. And then the next is how we calculate your gross monthly income. So we qualify on gross income, not net income. So if you're salaried, we just go off of your salary. Hourly, we will go off of your average hours worked times your pay rate. So if you're paid weekly, we'll do 20 times 40 hours times 52 pay periods divided by 12. If you receive bonus on top of that, we average that for the past 2 years. Same with commissions and overtime. The only time it is different with if you're self-employed, it's a little bit different. We don't go off of your gross. So you're getting 1099. We don't go off of that gross amount. If you file on a Schedule C, you have your gross, then you have deductions, and then we take that net amount. So we would take your 2022 net and your 2021 net, and we would average it, and that's how we would come up with your monthly income. So here's an example. So this one, the salary is 50,000, so 4,166 a month for income. Housing payment, the 1,765. And then we have debt from the credit report. We got an auto loan of 300, 2 credit cards, $30 each, and then a student loan for 100. So we got 460 total. So we're going to take the 1,765, and then we're going to add the 460 from the credit report, which comes out to 2,225. And then we're going to divide that by the gross monthly income of 4,166. So we have a debt to income ratio of 53.41%. So if we look at the bottom here, where you see the max debt to income ratios, a conventional loan, we can't exceed 50%. FHA, we can go up to 55%. And then conventional FHA with IDA, we can't exceed 45%. So in this example, we would have to go with just the FHA, or we would have to lower the purchase price to get it down to 45% debt to income ratio. So that's how we calculate that. Now we'll get into amount bringing to closing, cash needed for closing in this next section. We're going to talk about IDA and the qualifications for that and get into the amount needed for closing. So IDA available for first-time and non-first-time home buyers. Must purchase a 1 to 2 unit single-family property within the state of Illinois. Borrowers must occupy property as primary residence. There's no non-occupant co-borrowers allowed. And then it's just a 30-year fixed rate loan. And then we got VA, FHA, USDA, and conventional that we would attach it to. Income and property, there's income and property purchase price limits, and we'll get into those in a little bit. Minimum credit score, like I talked about before, 640. Maximum debt to income ratio, 45%. Borrower must contribute 1% of purchase price or 1,000 from buyer's own funds, whichever is greater. So if you're buying something for 200,000, you have to at least put 2,000 into the transaction. They also, you have home ownership counseling that's required. You could take that online, and then they just give you a certificate that you send over to me. IDA interest rates, there's only one interest rate offered each day. We get an email from IDA every morning for FHA or conventional. So they don't change daily, like if you were going FHA or conventional. And they don't change much, to be honest. The IDA down payment assistance is a second lien on the property, which is only the 10,000 program requiring a repayment. Here's an example. This is today's email. These are the current interest rates for the IDA program. You got conventional at 6.375 for all of the loans, and then FHA is at 6% today. Here's the income limit. So for Cook, Kane, Lake, McHenry, McLean, Will, max income limit is 125,000. So if you do make more than 125,000, you will not qualify for the IDA program. And then the max purchase price here below is 350,000. So you can't purchase something for more than 350 qualify for IDA. So now let's get into the 3 buckets of cash of a purchase. So this is an example of how you can bring 1% of your own funds to the closing table. So this is a $200,000 purchase price. We're using the 10,000 down payment assistance. So you have your average closing costs are around 5,600. That's everything. That's title fees, attorney fee. That's everything included in it. The only thing that's not included in there is the home inspection. Home inspection you guys will do on your own, and you pay that up front. And then IDA does have an origination fee, which is 1% of the loan amount. So in this example, it'd be 1,930. So if you look, we got bucket number on the purchase side. And first, if you look at the rent, if you are going to rent, say your rent is $1,500, you have to give the first month up front, and then they always ask for a security deposit. That's $1,500 plus $1,500. You're given $3,000 up front. And then if we can go with the IDA program, you got your bucket number one, which the down payment would be $7,000. So that's $200,000 times 3.5%. That's your down payment. The first bucket there, the borrower, for earnest money, we always tell the buyer to put the 1% as the earnest money so that they're bringing nothing to closing. So you would put $2,000 for the earnest money. You're already done with your 1%. You have $5,000 of that $7,000 left over. IDA will cover that. So we still have $5,000 of IDA money left over. Bucket number two is your closing costs. So the closing costs would come out to about $7,530. So IDA is covering $5,000 of that. And one thing that you can do when you're negotiating is you can ask for the seller to give you a closing cost credit. So in this case, you would only need to ask the seller for a $2,500 closing cost credit. So if you get that, you got IDA covering a portion of the closing cost, and the seller's covering the rest of it. The third bucket is prepaids. This is setting up your escrow account for real estate taxes and homeowners insurance. So in Illinois, the taxes are in the rear. So the tax bills that are coming out this year are really for 2022. You did not live in the property in 2022. So the seller is going to give you a real estate tax credit. And that real estate tax credit almost always covers the third bucket. The only time it does not is if it's new construction, if there's a senior exemption or a senior freeze on the tax bill. But most likely, your bucket number three would be zero. And what the escrow account is, when you're making mortgage payments each month, you're going to be paying the monthly real estate taxes and the monthly homeowners insurance. So each month when you make the payment, they're going to take that portion out of your mortgage payment, and they're going to put that in your escrow account. So when the taxes are due, they're going to take that money out of your escrow account, and they're going to pay the taxes and the homeowners insurance. So you never have to worry about paying the first installment or the second installment. Your escrow account will be paying for it. And then here's an example of what the monthly payment would look like based off of the FHA IDA 10,000. So you got $1,177.38 for the principal and interest. You got the down payment assistance, $83.33. That's only if we go with the 10,000. If you go with the 7,500 or the 6,000, you do not have that payment. Real estate taxes $400, homeowners insurance $100, and then the mortgage insurance $87.97. So your total monthly payment would be $1,848.68. And then here's just another example. This is a purchase price of $150, and this is using the 7,500. So we're gonna do earnest money of $1,500. Then IDA is gonna cover the rest of it, $3,750. So the down payment is now zero. You're only putting $1,500. Bucket number two, closing costs. You got IDA covering $3,750 of it. And then for this example, you would need $3,000, just say $3,300 from the seller to cover the rest of the closing costs. And then we're zero in the prepaid section. So you're only putting $1,500 into the transaction. So you got $200,000, you're putting $2,000 into it, and then $1,500 for the $150. And then this would be the example for the $150,000 home monthly payment. So we got the $883. We got zero for the down payment assistance because we're going with the $7,500 that is deferred. Real estate taxes $375, homeowners insurance $100, mortgage insurance $65. So total monthly payment $1,424.02 would be your monthly payment. And then we just have one more example. I just wanted to show you guys what it would look like if you didn't go IDA or weren't able to get a closing cost credit from the seller. So this 200, whoops. So you got 7,000 plus the 5,600, you'd be bringing 12,600. Now, say our debt to income ratio is too high. Say we're at like 47%. We can't go IDA. The other option that we can do is you may have the 3.5%. You may come to me and say, I have the 3.5%, but I don't have the closing costs. I got the 7,000 in the bank, but I don't have the closing costs. Well, then that's when we can go to try and get a closing cost credit from the seller of 5,600. So then all you're bringing to closing is the down payment then, instead of both. So that would be another option if the debt to income ratio is too high, or if the credit's not at 640, we can still try to get what you're bringing to closing down by getting the closing cost credit from the seller. So just a review of the 3 buckets of cash needed for closing. Bucket number 1, down payment, 3% for conventional, 5% for conventional if you're a non-first time home buyer, 3.5% for FHA. And then if we go with IDA and we get a closing cost credit from the seller, could just be 1% of the purchase price. Bucket number 2, closing costs, approximately 5,600. And then there's an additional 1% fee if using IDA funds. Who pays? You can pay the borrower, IDA can pay, and or Vanessa can negotiate to have the seller pay. Seller either outright agrees to it or asks to pay $5,000 more for the seller's home, provided the seller pays $5,000 for closing costs, which there's another slide on that. Other option would be your lender can pay some with a higher interest rate. This would only be for non-IDA loans, so just an FHA or conventional. So my last worksheet where we weren't going IDA, this could be an option also. Instead of maybe you can only get a $2,500 closing cost credit from the seller. What we can do is we can increase the interest rate a little bit, and then then we can cover the rest of it. So that could be another option too. In order to get closing cost assistance from seller, you must first set the table of expectations, price agreed to between a willing buyer and willing seller. Type of property that you would want to look for to get a closing cost credit. Motivated seller, home has had at least one price reduction or has many days on the market. A motivated seller sells for less. Motivated seller allows you to gross up the purchase price and will participate in your closing cost assistance. So here's an example. So if you make an offer for 200,000 and you're asking for 5,000 closing cost credit, the seller comes back and says, we'll accept your 200,000, but we're not giving you 5,000 for a closing cost credit. You go back to them and you say, well, let's bump up the purchase price to 205. You give us the 5,000 closing cost credit. The seller's going to say yes, because they're still going to get their 200,000. And then Vanessa will make sure that the home will appraise for the increased purchase price. And this won't change your monthly payment. 5,000 will not change your monthly payment like at all. Third bucket, this is the escrow, prepaid interest, pay interest from date of closing to the end of the month. So if you were to close, say, April 15th, there's 15 days left of the month, so you would owe 15 days of interest. And the reason you owe 15 days of interest, your first payment, so if you closed April, your first payment would not be till June 1st. So, and that June 1st payment is really for all of May. So the rest of April, that 15 days of April, that's why they charge you the 15 days. They're not going to lose out on interest. Therefore, a lot of people will purchase at the end of the month, so they're not paying a lot in interest. Oops. Sorry about that. And then escrow account, we'll always put 3 months of homeowners insurance in your escrow account to start off. And then depending on what month we close, we'll either put 2 to 8 months for real estate taxes. And then, like we said, seller credit, you'll get a seller credit for the real estate taxes. And this bucket is usually 0. So how much funds do you need for closing? Bucket number 1, down payment could only be just 1% of purchase. Bucket number 2, closing costs, 0 with IDA and or seller paying closing costs. And then bucket number 3, 0 because of the seller real estate tax credit. So how much down payment do I need? As little as 1% if we go IDA. How much savings do I need in the bank? Could be 0. How good does my credit score need to be? 580 for FHA, 620 for conventional, and then 640 for conventional FHA IDA. What does my housing payment consist of? Principal and interest, homeowners insurance, real estate taxes, mortgage insurance, and then if condo, HOA dues. What are closing costs? They're going to be about $5,600. What are escrows? Amounts set aside for the real estate taxes and homeowners insurance. And then how much loan do I qualify for? That will be determined by the debt to income ratio, not to exceed 45% for IDA, conventional 50%, or 55% for FHA. So next step is to get pre-approved for free, obtain a free credit report, credit rescore if necessary, assemble necessary documentation for a full application, get an automatic underwriting approval. And then once I get the automatic underwriting approval, that's when I will then send you out the pre-approval letter. These are the documents that we will be asking for. Now for pre-approval, the one that I care about is just your income documents. So if you're salary or hourly, I'm just going to ask you to send me your most recent 30 days worth of pay stubs, last 2 years of W-2s, most recent tax return. Everything else will come once you go to contract. So you got bank statements. We're going to ask for your most recent two months of bank statements. If you're using a 401k retirement, we'll ask for that. For the property purchase contract, earnest money check, homeowners insurance, we'll need the agent name, contact information. And then the right-hand side is if it applies to you, divorce decree, child support order, bankruptcy. And then if you own other properties, we'll need that mortgage statement, proof of insurance, proof of HOA. And then if you're getting a gift from someone, for a conventional, we just need the evidence of transfer and deposit. For FHA, we need the evidence of transfer deposit and document donor's ability to gift. So we need the bank statement from the donor for FHA. Conventional, we do not. Conventional, all we're really looking for is a copy of the canceled check and a gift letter. That will suffice.
Okay, I got a question, Tony, for the
Yep.
audience. What is considered a gift, and how much is there a
There's no max to it. There's no max to the gift. A gift can come from a so it's a little bit different. It can only come from a blood relative for conventional, and it can come from blood relative and friend for FHA. Friend is kind of, you just have to do like a letter of explanation of how you guys are friends.
So if you have any rich friends out there and they want to
Yeah.
give gifts to help you buy your home, you could do an FHA loan
Yeah,
with their cash.
yeah, yep. So yeah, there's no max for the gift. And then any other questions right now?
Yes, do anyone have any other questions? You can unmute yourself and ask, or if you want to ask in the chat, you can do that as well.
Yes,
Yeah, so-
Glenn, could you send me that mortgage application checklist
Yeah,
and your email and your phone number? As I'm definitely, very much, a lot of stuff pointers that you did talk about. Because I am working on my credit score big time.
okay.
Bringing it up
Yeah,
to the
absolutely. I think here is all of my info here. So one of the things you guys can do right now is you can download my FCM Express app, and this is where you can apply. You can fill out the application that way. So there's the QR code's right there. If you just take your phone, you can download it. And then there's my phone number and email, but I will still send you that checklist. And we will be sending out the replay to this also.
Absolutely. And if you have your phone up and if you're able to like hover over this, if you're watching from a computer, it should automatically take you to where the app is.
Yep.
Through the QR code. So there you go. And you can reach me directly as well if you need this link again.
Yeah, I got your stuff. And here's all Vanessa's stuff.
Yes, that is my information. I do see okay. I was just looking at, I was gonna say I see a few people who joined in, but if you have any questions or if you missed the first part of this presentation, again, we will have a recap of that.
Yeah. Yeah, and if you guys have any questions, just give me a call.
Okay, Tony, put your information back up. I got hers, and that's I'm gonna see yours again.
There you go.
Okay. Okay, I got it.
Perfect.
Yes. Thank you. You've been, everything you explained is very explanatory.
Oh, thank you.
Very motivating.
Yeah, I try to make it as easy as possible because I know this is the biggest purchase you will make, so you got to understand it.
Absolutely. And if you don't understand it, please ask questions. If this is fresh to your eyes, and I know for a few people here it's not, you've seen this before, but if this is fresh, it can seem a little intimidating and it can seem a little out of your realm because it's a lot of legalese when it comes to this type of situation, this type of transaction. So we all know that. So we're good on people who have questions. Please ask because it's best to be an informed buyer versus a regretful buyer. So
yeah.
And this is also good for sellers as well. If you're looking to sell a home, everything that was on this presentation, you can use that to help boost your sales. If you're trying to put a home on the market, you can introduce this to your buyers or potential buyers.
Yeah. Yep. It's good for anyone.
But if we don't have any questions, if you guys are good, we can conclude this presentation. But if you have any questions, please ask.
Hi, Vanessa. This is Sabrina Butler. I put a question in the chat, but I'll ask since I unmuted. I recently filed a Chapter 13 that was discharged. If I've done that, how long do I have to wait before I can purchase?
Do not have to. So Chapter 13, it's discharged. All right. When was it? Well, I'll just say once it's discharged, you can apply for a mortgage. The only thing, once it's discharged, you have to wait 2 years for us to be able to go with the down payment assistance. But the reason is because we have to do what's called a manual underwrite. So manual underwrite, we don't run it through the automatic underwriting system. My underwriters manually do it. So it's a little bit different, but you do not have to wait. And I can talk more into detail about it with you.
Okay, yes, I do have your information, so I'll make
Yeah.
sure that I reach out because I'm interested in it. And I just want to know what I'm gonna need to do. Because I am
Yep.
working on my credit. It's much better than what it was, of course. But I just didn't know what my options were.
Okay. Yeah, no, absolutely. Yeah, let's talk and we'll go into more detail about it.
Appreciate it. Thank you.
Yep.
And for those of you who are still on, I forgot to mention this. There's been a lot going on today and this week. However, tax deadline. So if you haven't filed your taxes, please do so by the 18th. And if you have filed your taxes and did not spend that money, most certainly you can hold on to it for a down payment.
Mhm.
So
Yeah.
you can hold on to it.
That
You
is
can
it.
invest
That's it.
And,
That's
and
it.
yes,
You read my line, Vanessa.
yes. So there you go.
Mhm.
All right, so I thank everyone for coming in. Thank you. Again, if you need any more information, you can reach out to Tony directly, or you can reach out to me directly, and we can move forward. And if
Yep.
you need help in your situation, we can help you with that as well. You know,
Yeah, we can set up a plan.
Absolutely. So thank you so much. Thank you, Tony, again.
Yeah, thanks guys for showing up.
And you guys have a lovely day. We still got a little bit of sunlight. So yeah, let's go out and enjoy that, shall we?
Absolutely. All right, you guys have a good one.
Thank you.
Bye-bye.